Give us a buzz, 13 12 83, if you'd like to ask him anything financial, or indeed our next guest who joins us from Accountancy Invest. Welcome to Lance Lane. Nice to see you again, Lance.
Great to see you, Ed.
We've got plenty of questions and categories that we can use your expertise to answer, haven't we, Switz?
Yeah, and we're gonna make him work really hard.
Oh, good.
It's nothing like sucking out all the information from an accountant to get wealthier. And Lance has got all the information. By the way, I was thinking about Wendy's great question. We have fantastic listeners. Wendy, probably the best answer would be if the market continues to go up, that portfolio that is reflected in the Switz, it would go up in value, and therefore the unit price would go up. Mm-hmm. If the market fell, well, then it would be cheaper to get into it. All right, so that's probably the best answer. But you know what? We'll also grill Paul when he's back tomorrow on that very good question. It's a great question.
Let's get him while he's jet lagged.
Yes, give it to him.
All right, Lance, here we go. Sing for your supper.
All right, now, the reason why I want to get Lance on the show was, many years ago when I was a school teacher, a lot of school teachers do coaching, and a lot of people want to pay cash and all that sort of stuff. But I always wanted to do it very legitimately, and just actually admit to the fact that I was getting cash income on the basis that I wanted to create a business. And I thought, well, if I do this, what are the legitimate tax deductions I could do if I actually, set myself up as a business? So we started Switzer Coaching School, and Switzer Coaching School eventually was the company that rolled into the media in the early days. And so I was earning income as a teacher. I was actually teaching Lance in those days at Sydney Grammar School. Yeah. He was a little boy at Sydney Grammar School. Well, it wasn't. He was probably a teenager. But the bottom line is this. I was able to take a proportion of I leased a car then for the very first time, and a proportion of the lease was claimable because I was driving to people's houses to tutor their kids and whatever, and I was able to claim a part of my telephone. And I've got to say, a lot of my colleagues at Sydney Grammar School thought, gee, he's doing well driving in with a new car. But it was all it was a learning process. It was a very interesting learning process. Lance, do you think a lot of people don't realise what are legitimate tax deductions when they go into business?
Well, I think, Peter, the car example that you gave is a really good one. I mean, we're all using our cars, and unless you register for a ABN or formalise something that you might just conveniently keep off the books, then a car, which we all use, would not be otherwise tax deductible because you haven't got the income against that to offset it. Now, it might be that your income breaks even with respect to against your car claim, right? Yeah. Or it might incur a slight loss even, perhaps.
Okay, so basically what I found was a whole lot of expenses that I was paying out all the time. Admittedly, I was doing more driving, so therefore it meant it was quite legitimate that I had to actually claim more. But things like telephone, I think, I was able to work out that in terms of the income I earned against my total income, it gave me a proportion that I was able to claim. Explain how a person works out how much he or she could claim if they were operating a business, say, from home.
All right, so at home, you could claim part of your running expenses for the premises. Now, there's been a bit of a clampdown in relation to home office deductions, and there's one of the real standouts was that there were these barristers that were taken to task by the tax office who actually claimed their home office because obviously a barrister needs to do a lot of reading to prepare for cases. Yeah. And it was found, interestingly enough, this is a very large area of deduction where a home office by these barristers would be claimed, and it was actually denied at the High Court. And so this is an area...
Can you tell us why they did? Because I think a lot of people out there have home offices and they do claim it on their tax.
And so this was quite surprising, and it's an example of the tax office being quite harsh on this. You can't just casually claim things, and this is why good advice before you claim it is needed. The reason in those instances and there were two of them, the two barristers were both denied, was because it was seen that the Home Office was too much of a connection to a private situation. They had barristers' chambers.
Yep.
And those chambers obviously were the formal places of work, and it was deemed that, the Home Office, they need to read stuff, but it was looked upon as not sufficiently necessary to make the income.
Yeah, that's interesting.
So what circumstances is it claimable?
Yeah.
Clearly, in the rarer instances, if you're a doctor or a dentist and you've got a surgery, no problem.
Yeah. So surgery is in the home, and we see a lot of them in the suburbs.
You see the little red lights on.
Yeah.
The other thing is, of course, if you're a tradesperson, you've got a workshop at home where you do things, no problem. If you're in sales, as an example, and you're required to keep a home office because you're coming in and out and you're taking stuff, that's okay.
Yeah.
If you also carry heavy equipment around the place and you need things at home.
Yeah, like a garage or a lockup or something, yeah.
And also, if you're, say, in this day and age where you've got offices that are multinationals and you're in a role which requires you to report or liaise or do business with people from around the world, and you're regularly doing calls
at odd times and things.
At really odd hours. It's midnight here when the US is 9 a.m. And so therefore you've got really no choice but to do your work at those odd hours. You've got to keep a 4-week diary, Peter, of proving that this is really needed, and then you can claim occupancy expenses.
It's interesting that you throw the word diary in. A diary can be a powerful weapon of defence if you're ever investigated by the ATO, if you actually make formal entries about where you think you've incurred an expense in relation to earning income.
Correct. And the diary, we should realise, is not just creating a diary of an actual expense. It's got to be a little bit more than that. It's got to document what you actually did, and that actually goes for
like meeting with accountant.
Yeah,
a meeting with brilliant accountant.
That's right. From accountancy
to learn my tax deductions.
And so when you can document phone calls that you had with your brilliant accountant from Accountancy Invest.
Nice plug, Lance. All right. So, but also in the age of the credit card, there's also links as well, isn't there? Because once upon a time, people would lose their receipts. But if you got a diary entry and you got a credit card statement to prove that a certain activity happened, that's another example of how to prove what you're doing.
Absolutely. But getting back to your original question of claims, so of course, if you own your own home, you need to be careful because you can potentially make an area which is basically subject to capital gains tax and lose a proportion of your principal.
Now, this could be scaring some people.
That's right.
So give us an example. Let's imagine you've sold a house for $1 million,
okay,
and for 5 years you've been running your home office. You're running a business out of one room in your house, and there's say 10 rooms in the house. Okay, could there be a capital gains tax implication? And let's say the capital gain was $500,000. Went from $500,000 to $1 million.
Absolutely. So if you've got a capital gain of $500,000,
yes,
and you've been going now for 5 years?
Yeah, you bought the house for 5 years, and it was there the whole time.
So it's $100,000 a year.
Yeah.
Okay. So of that $100,000 a year, and let's say you've got a 1/10 of a room, right? Then of course you're going to be subject to 1/10. That $50,000. You're going to pay tax at the marginal rate on that 1/10.
Do you get the capital gain discount?
You do.
So 50,000 will
half of that
come down to 25,000.
Correct.
So then you would pay your tax rate on the 25,000.
Exactly, and that's quite. Look, obviously, $25,000 on $500,000 isn't a big deal.
No.
And you would have claimed a certain amount of tax.
It could be a really good Chinese meal at Dixon Street, Lance. A very good meal.
And So that could be, if it's only 1/10,
Yeah.
there's no big deal.
Yeah.
But quite often it could be more than that,
Yeah.
and that's where the pain sort of sets in.
And it's something to be mindful of, isn't it? Look, I got a friend of mine who's just started off as a baker, right? And he's growing his business, and a lot of restaurants are going to him and all that sort of stuff. Now, he hasn't got an ABN yet, but once he gets big enough, he's going to apply. At what income level do you have to apply for an ABN?
Well, Peter, you really have to apply for an ABN if you really want to claim tax credits, right?
Okay.
And if you want other people to be able to claim your input tax. So if you supply to a restaurant and that restaurant obviously is buying bread from you, then you have to have an ABN.
Yeah. So often the customers make you go for an ABN.
Exactly. The question really is, when does he have to register for GST or when should he register for GST?
Yep. Okay, so that's the question. Good question. You answer it.
So really he should register for an ABN as soon as he's really making a business out of it, right? That other people can claim input tax credits when he sells his wares.
Yep.
The GST is the part where he really should register. And if your mate who's the baker, should come to Accountancy Invest, because he'll need to pay for setup costs, right? Yeah. He would have paid for setup costs, a baking oven, all the rolling pins, etc., the tabletops and trays. The list goes on of capital works.
And that's all GST and all that stuff.
So he can... Because what's happening is he'll sell his bread GST free because it's GST free, that's part of product. But he pays GST on these capital goods, especially on setup. And so therefore, if it cost him $20,000, $30,000 to set up, he'll get a refund of $2,000 or $3,000 just for registering.
Yeah, very good point. So people out there should really think about registering for an ABN when they're buying lots of stuff and paying GST, because businesses get it refunded.
Right.
Okay, let's go to the next question. A lot of people out there want to buy property, and they're thinking about buying, say, in Brisbane. If you own a property in the state, can you go and see that property and the actual going to see to make sure everything's okay, maybe talk to the agent and all that sort of stuff, is that tax deductible?
Absolutely, Peter. You can't claim a deduction in relation to, say, going in the state for a property that you don't own.
No.
Right? But what has to happen is, as soon as you own it and it's earning income for you, then when you go to visit it, to see agents, to do repairs and check up on repairs, to see tenants even, you can claim a tax deduction for flying there and flying back, cost of car rental for inspecting the property, and associated costs, even if you were to stay overnight, because obviously, you can't just, the
agent might not be able to see you till 5:30.
Right. So, look, you staying overnight, you've got a deduction claim for being away, and there's meal allowances and accommodation expenses that you can claim.
If you also go to SeaWorld while you're there, is that
good question?
Okay.
It's the SeaWorld proportion would have to be taken out.
Fair enough.
So, if you rented a car and you've obviously one day is business, but the other day is pleasure, you can only claim half.
I had to ask, Lance. Okay,
fair enough, Ed.
Yeah, but okay, we'll save other questions for other days when we've got Lance. Right. Now, we're flying to London for a 3-day conference. Let's say it's a really interesting conference with accountants, Lance, so you'd enjoy it. Okay. What proportion of the total bill, and you decide you want to fly business class, total bill including a really nice hotel, does the tax office make you stay in low-grade hotels, all that sort of stuff. Say it ends up being a $15,000 excursion, and you're there for 3 days for the conference. What amount can you claim? So
again, Peter, if it's a 3-day, you've got to keep a. So it depends. A diary. So it depends on, in this instance, if you're employed, self-employed, or you're doing this on your own behest. Yeah. Okay. So the same. So say you're self-employed. We're sticking to business today. Okay. So if you're self-employed, if you are a director of the company, and you're paying yourself a salary, okay, there's basically accommodation, meals, and allowances that if you are below $91,000, say, there's three bands, below 90, up to 150, and over 200, right? If depending on the band that you're in,
for income, is it?
For income, if you're self-employed and you're your own director, right? You can have unsubstantiated, like claims which you don't have to fully substantiate, that falls below the tax office's reasonable deductible limit for accommodation, for meals, and daily allowances, and so. Getting back to your example, if you're flying to London for $15,000, if it's only below, if it's less than 3 days, of course, you don't need to keep a diary, right?
Okay.
But if it's over, you need to keep a diary, and you need to then start apportioning those expenses.
Okay, very good. Very interesting. Ed?
Yeah, quick follow-up question for you, Lance. Glenn in Gordon is through on 131283. Go ahead, mate. Thanks for hanging on there.
Yeah, no problem. Thank you. This is not exactly business related. You mentioned property before. I have a property within my super fund, and it's pretty much that's all I have in my super fund. I rolled everything over and bought a 2-bedroom unit out at Fairfield, and I was just wondering. I'm getting charged for the last, I've had it for about 3 years. In the last 3 years, I'm getting charged about $2,000 per year for the return and the audit on it as well. So, combined. So, I was just wondering what you thought of that price, and should I be paying sort of less or more, or is that around about the price you would be paying for the audit and the return for that, just the one property?
Yeah, look, it's is it just yourself and your partner that's in the super fund as well?
No, it's just myself.
Just yourself. Look, that is not an unreasonable charge. Obviously, you can sort of Accountancy Invest might provide some superior ancillary advice, but that's not too bad.
Yeah, I've got to say, I reinforce the brilliance of Accountancy Invest, Glenn, but when people ask me about how much money they should have in a self-managed super fund, or in a super fund before they go self-managed super fund, I say you want it around at least 300,000. And I said, because accountants with all the auditing charges often will charge about $3,000. Others charge a lot more. You might be complex, and that could be the reason. But 3,000 on 300,000 is a 1% charge, and 1% is not bad. So, because given what you're doing, even if you had more assets in there, it still wouldn't be that much. I don't think you would charge much more than that.
So, Glenn, can I ask you back a question? Did you gear into this investment, or did you buy it outright?
Yes. No, I actually, at the time in about late 2012, I actually borrowed the maximum. I was very keen on the idea of property, and I didn't have the 300,000. I actually had the minimum. As a matter of fact, I just had the 85,000, and I borrowed 80%. So I have a loan of 200,000 on it, and the property's probably worth around 450 now.
You've done well then, haven't you, out of that?
I think so. Hopefully it goes well into the future as well. Yeah.
How old are you, Glenn?
46.
Okay, yeah. I'd love to see over time you build some shares in it as well. So you become diversified, because you got a good asset there. It seems to be increasing capital gain, and you're getting good dividend/rent. But over time, because you're 46, you should actually have diversified assets. Term deposits, shares, and that great property. Well done.
Yeah. Well, I wouldn't mind buying some of those Switzer shares.
Oh, mate, I didn't set you up for that, but certainly that's not a bad idea as well, I got to say.
Good on you, Glenn. Appreciate your call, mate. We've got to get a quick break. Lance, thank you for all your input today. And, of course, we've got to get you back for more of Switzer's probing questions as well.
I reckon he's so good.